So this is 0 DTE put spreads, impatient bulls, profit targets for narrow wings.
Perfect. At Tasty, we often like to avoid a directional bias and have focused our 0 DT research on delta neutral trades.
Okay, and this makes sense because most of our research is done with 45-day options. This is only 2.5 years old, so it's new, right?
And most of our 0 DT research has been on selling both sides. Doing iron condors or strangles, synthetic strangles.
Yeah, and so we're learning. The steady upward movement in SPX, however, is leading us to look more closely at into being bullish in these extremely liquid markets.
Today, let's analyze the data to evaluate how various combinations of short strikes and profit targets have performed when selling narrow 0 DTE put spreads. So this came on the heels of last week's study on spreads that performed very well, and we talked to Jacob and he said, he's nervous about the drawdown. If we get into a period of a bear market where people would have multiple losses, the drawdown could be too much on those wider spreads.
On the wider spreads, if you're $25, $30 wide, all those things. So when you're looking at it from 2.5 years, the massive drawdown or the cumulative drawdown could be big.
Right. So we asked, okay, if we're worried about a big drawdown on a wide spread, let's do a study on a narrow spread with a smaller drawdown.
Yeah.
Okay.
Sure. And they are picking up back there. I hope you can hear them.
I know they are. They are. It's getting busy back there.
Back down 16. Okay. Using over 2.5 years of data in the 0 DT SPX options collected every 10 minutes.
Consider the results from selling one $10 wide put spread every day at 9 a.m. plus or minus 5 minutes. So the study only looks at $10 wide put spreads. That's it, $10 wide.
And I think it's been established from other studies that the time is 9 a.m. give or like 9-ish, right? That's the established time frame from other studies.
Plus or minus 5 minutes. Mm-hmm.
Okay, short strikes evaluated range from 50 delta, meaning at the money, down to a 20 delta.
So if you're selling a $10 wide at the 50 delta, you're going to collect more and have much less risk than if you're selling your $10 wide spread and starting at the 20 delta, you're going to have more risk on that spread.
Yeah, and the charts actually explore that a little bit.
Okay. Explored a range of profit targets from 10 to 50%. I think when you're selling a narrower spread, I think I like to go get a bigger profit target.
When we sell a narrower spread, we do have a higher percentage, but we've been doing it by dollar amount. So this is an interesting study. You can extrapolate it out.
And I think when you sell one side, you could look for that bigger target because you just need movement in your direction, not time to pass.
Not time to pass.
Yeah.
So they examine the total number of winning trades, the total profits or losses, and the maximum drawdown. That's the key from last week, too. Mm-hmm. The largest amount someone could have lost if they lost following these mechanics every day by starting at an unlucky time in the study.
Okay, all trades were assumed to exercise at mid-price. All times are Chicago time. Okay, so here we go. This is a 0 DT put spread starting with the 50 delta. So you're selling the 50 delta put on the 0 DT, making a $10 wide spread. And we're looking at closing it at 10%, 20%, 25, 35, and 50% profit target.
And so let's take a look at this. My eye line, Jenny, and maybe yours is going to be a little bit different. Take a look at the average P&L for trade. You notice that it goes steadily up. You're going 27, 41, 50, 63, 79 as the profit targets go up.
Yes.
So to me, I know, and you know, because we've done this so many times, if you're selling that at the money, which is the 50 short strike, $10 wide, you're going to get between $3 and $4 for it.
Right, exactly, $3 and $4. Selling the at the money, $10 wide, between $3 and $4. So 10%, $35. And then 20%, $70. So as you go up,
this makes sense to me because you're getting, so if you're doing the $50 strike, so this is the same trade. This is your $50 strike, $10 wide. This is just profit target difference. It doesn't have anything to do with collection. I just wanted that to be very clear.
So one thing, when you look at this, you might say, oh, well, just close at 50%. That's the highest average P&L per trade. But I will say that win rate is the lowest. So there's a fine line between, do I want to go all the way for the 50% profit target, but then I only have an 81% win rate, or do I want the 25% profit target with the 86% win rate? So there's a balance, and I don't know that there's a exact this is the answer.
I don't know. I consider this a menu. I just know when I'm trading and I have a narrower strike, I have a tendency to put it in for a higher percentage. So kind of extrapolating, I land in probably the 35% profit target. So if I sell something for $3-ish, I did it or something today, I'll put in a dollar amount in there, and it usually winds winds up being around, 35, 40%.
And originally, too, I am in about 30%, right? So if I sell something for about $3, I'm usually looking for $100 on one spread.
Yeah.
So we've got one $10 wide spread. You sell for about $350. Taking 30%, you're getting about $100.
Yes.
That's usually what I go in with. I don't necessarily hit percentage. I try to take about $100. It falls in the 30% range.
And we'll post all these charts up there. There's one other thing that I want to mention on here that wasn't mentioned in there, but we just know this from Jacob Studies. So just because you're closing it at 10% profit, or just because you're closing it at 50% profit, that doesn't mean that all of the ones that aren't, the 81%, were closed at max loss. I just need this to be clear.
Right.
That just means it never hit your 50% max profit.
It didn't hit your...
you could be winning 10% and it goes into that loss column.
Right.
You could be winning 30% and it goes in that max loss column, because the SPX, they are cash settled. So even if it's a win, if it didn't hit that 50% profit target, it's still a win in your column.
Now,
that's why that $79 is higher.
I want to talk about that max drawdown. Now, I know a $10 wide spread, if I'm collecting $350, my risk is $650.
Ish, like wrapped around, yeah.
Ish. So for all of these trades, your risk is, even if your risk is around like $600, $650, and the max drawdown $3,900, $2,900, $2,600. This is if you start and have a streak of losers.
And that would be a streak of what, 4 or 5? I mean, that's a lot. That's a lot to if you got in, and your first is a loser, your second's a loser, your third's a loser, and you keep going back at it. But that average P&L nets out all the drawdowns in the wins.
Right. So this one is what we usually trade more often.
Which is why
if we're just doing the put spread, the 50 delta. We're going to take a look now at using the 40 delta, which would be, moving. I'll pop in the platform here.
Well, no, we don't want numbers on this, so don't.
Oh, okay.
So
well,
I'm going to give a roundabout.
How far? I just wanted to see how
the 40
far.
delta is the just out of the monies.
And it's only $5 away. It's $5 away from where SPX is trading. So you're not really that far.
No, you're not. Well, 40 delta shouldn't be that far away. You're going 10 deltas down, so it's a strike and a half away.
Okay. So
from your 50s.
You're very close. And that, on the 40 delta, Liz, how much are you collecting on a 40 delta?
$290. So wait, hold on. So it depends. If you want to go with you got to choose $245, $250.
So instead of collecting around $350, you're collecting around.
It's also 10 o'clock, so it's a little bit later. You might because as your deltas, you might get more for the 40 delta if you do it at 9
a.m. At 9 a.m. So I just wanted an idea of drawdown. If I'm doing a $10 wide spread and collecting $250, my drawdown could be $750.
Yeah, and you can see that. So take a look at the P&Ls. They go up exactly the same. No, they don't start at that point because you're collecting less. So 10% of that is going to be less than 10% of your $50.
Right, and the win percent moves almost the same too.
Just slightly.
Yeah. So your percentage is a little bit lower if you're waiting for 50%, but that's the highest average P&L.
I'm surprised. Well, yeah, you're right. That is the highest average P&L.
And your least drawdown. So when we talk about, there's a fine line between managing winners too soon and waiting for the right amount. Because if you're risking, let's talk about this. If you're risking 700 to make 300, and you just take 100, 100, 100, but you lose 700,
which you don't always in this case.
No, but that's why I think the drawdown, the max drawdown, is much less if the closed at 50%, because your winners, you're taking so much more on your winners.
It takes less amount of winners, which is a study Jacob did, to recoup your losses. That's why your drawdown is less with more profit.
So I've been putting in take profit around 30%, but maybe I'll switch it to 50 if I'm just doing one side.
But Jenny, I agree, you could switch it to 50 if you want. I don't see that much of a difference. I really don't. I know the drawdown is less. I think that's kind of a fluke. I mean, it is what it is.
Well, in the previous one, the drawdown's less than the 35%.
Yes, that's what I'm saying. So it kind of moves. And then if you go to the next one,
where we have 30 delta, drawdown's a little less than 50%. But that makes sense because you're taking in more, you're keeping more, you're making more per trade, so it'll take less winners to make up for losers.
Correct. And we should see this. And then if you're going to the 30 delta, I'll give you a roundabout prices.
Now, when you're going to the 30 delta, what I find interesting here, if you're
getting
starting
$1.70 right now, today.
$1.70, and if you're starting at the 30 delta, look at your win percent. The win percents are all over 90%.
All over 90. But this makes sense. If you're getting $1.70 and you look at your 10%, you're getting about $15.82. There's a couple losers in there. Right. This is 10%.
So I'm curious to hear what Jacob's takeaways are, because I guess there's no clear winner. I think any of them.
I think you can wait. My personal opinion is when you don't have that wide of a spread. When I have a very wide spread, I'm taking in a very small percentage. But we do that all the time. The narrower the spread, the more defined risk you have, you can wait a little bit longer for a little bit more than 10%.
You could wait for more than 10%. Definitely. I would say, somewhere in the range of 30 to 50%. Like today at 9 a.m., SPOOs were unchanged, maybe down $1. Now we're down 20. But if you would have started with the 50 delta, that wouldn't have come off. But if you would have started with the 30 delta, that might still be okay.
That might still be, or it might be okay at some point during the cycle.
Yes. So I think there's a give and take. And we have a lot of viewers who like to go further with the 30 delta, 25 delta.
And a lot of them do both sides. We have a lot of viewers that do different things. Let's see Jacob's takeaway. Oh, there's the 20
and then here's the 20 delta. Here's the 20 delta. And very high win percentage. So you've got 97%, 96%, 95%. Very high win rate.
And once again, you're collecting, just roundabout numbers, about $1.15. So that's exactly what you should see.
Yeah. Now that drawdown is going to be more. If you have a $10 wide, you're collecting $1.15. Your drawdown is about $900 per trade.
But the drawdowns don't change that much.
No, not terribly. I mean, the lowest I saw was about 1,900, and here we're in 3,000.
Yeah,
but not terribly.
They don't change that much.
Okay, ready for the takeaways.
Can't wait. Takeaways. The typical reason to lock in profits early is to help maintain a high proportion of winning trades.
But as SPX climbed from 38.35 to 66.44, the vast majority of short puts were winners regardless of management, especially with with out of the money trades, especially with those out of the money.
And we saw that because everything was a winner. You saw no negative signs. As a result, being more patient and waiting for larger profits generally was more profitable.
In terms of downside risk, as measured by maximum drawdown, there was not a consistent pattern. Lower profit targets are better at avoiding serial losers, but bigger winners means it takes fewer of them to make up a loss.
It's true.
And I kind of like that. I like that to make up my loss quicker. So I might start switching to the 50%.
I mean, we're right there. You're right there.
30%, 50%.
You won't take 50% if you're using the 20 delta. Because you're not collecting enough. I mean, the farther out of the monies you go, you're going to take a higher percentage.
Yes, right. Yeah, I was going to say you would be more likely. Right.
Yeah,
if you're going to start with the 20 delta, you're more likely to wait for that 50%.
It's kind of like the more you take in, the less of a percentage you need.
Yes.
Okay. While the larger credits from two-sided trades makes taking smaller percentages appealing, with directional trades, it may be best to be a bit more patient. Now, in conclusion with this, the reason one-sided, you need one move. I've been out in 6 minutes. I've been out in 3 minutes. When you do both sides, you got to sit there. If you don't get the move, you don't get the move.
And he says be patient because we're waiting for a bigger percentage. We're waiting for 30% or 50%. So that's why Jacob says be patient. But to Liz's point, you might not have to be patient. You get a quick bounce and you could be out of this trade so fast, much quicker than when you're selling both sides. When you're selling both sides, if you're selling both sides and waiting for 10% or 20%, that takes a lot more patience than this.
Because time, you have to wait till time goes by.
Yes. So I've become a fan of just one side.
I do too.
You've brought me over.
I want to be consistent. And this is something that, like I said, something I do with my son. So consistency for me is key. And so that was a great study. I'm glad it's going to be housed with our other one.
Yes. So this study will be archived with our show today. We're also going to push it out on YouTube, and I will post it on Twitter for anyone that misses it.
Yeah, perfect.
Okay. Excellent.